Welcome back. And Mitali joining us at this hour to try and give us a lowdown of some of the moving stocks in trade this afternoon. Mitali, what's on your list?
Right, talking about the buzzing stocks in today's trading session. First up is UPL. So management told ET Now in an interview that they are quite confident about the growth trajectory going ahead and reiterated its growth outlook as well. The company says that its specialty chemical business it continues to grow at over 20%, while the seed business has maintained a healthy 15% CAGR over the years. UPL also reaffirmed its guidance of 10 to 14% for revenue and 14 to 18% EBITDA growth, reinforcing the confidence in its earnings growth trajectory. Next up is ESAB Small Finance Bank. That stock has been buzzing after the company reported a strong set of business updates for the quarter one of FY27, where the advances has risen nearly 27.4%, while there was a rise of around 18.6% seen in the deposits. So quite a strong business momentum coming in for the first quarter for ESAB Small Finance Bank. Also, TVS Motor, that is another stock that is buzzing. The company posted 13% higher than expected two-wheeler sales at around 5.9 lakh units in June. EV sales touched at around 1.3 lakh units, while the international sales hit an all-time high of 4.68 lakh units. Also, Vedanta Aluminium, that stock is in focus after brokerage sounds optimism. MK has initiated a coverage on the stock with a target price of around 550 rupees. Now, the brokerage, it expects the global aluminum market to remain in deficit through calendar year 28, supported by constrained supply and also robust demand from power infrastructure as well as renewable energy. And finally, Camlin Fine Sciences is attracting attention after its investor meet. Now, management here expects margins to improve by over 200 basis points, guided for quarter two EBITDA of around 75 to 80 odd crores, and also reformed its full year revenue guidance and EBITDA outlook, while also progressing on the debt refinancing plans. So all those stocks are quite in the buzz in today's trading session.
All right. Thank you so much for that, Mitali. Let me bring on board Sachin Relekar, Senior Equity Fund Manager, Axis Mutual Fund, joining us this afternoon. Sachin, great having you. Let me start off, Sachin, by understanding how you're looking at some of the auto sales data and how indicative is it of the underlying strength of the economy currently?
I think it's surprised quite positively. I mean, the consumer discretionary demand has held very strong compared to the expectations also. And this is actually quarter one is quite overshadowed with the geopolitical conflict, the fuel prices risen also, and there's also an adoption of EVs from the consumer, but across, as in ICE engines as well as EVs, both have actually shown good resilience. At the same time, if you look at the export data, I think that at least for the two-wheeler segment is actually very strong, and that is where actually these companies are not only just got a cyclical base which is helping them, but they also broken into the newer markets like South America, LATAM, etc. And that I think actually is showing up in their numbers. So this is a very positive print. And yes, I mean, I think you will also see that in consumer retail financing companies as well, because I think there also that expectation is quite constructive that way.
And Sachin, I wonder, therefore, how do you play auto at this point? What's the pocket where risk reward looks the best?
I think this is actually getting split into two parts. Auto ancillaries are separate set of companies. I think there's a different way of looking at those. In terms of OEs, we are basically looking at companies which are going through a very strong product cycle, very strong geographic mix as well. And there is also a play on EV per se, because I think wherever the power train agnostic kind of characteristics there, but at the same time, companies also positioned very well in terms of the product cycle, because they are showing a very strong market share strength, or they are into the segments which are actually growing. Likewise, SUVs are still a growing part of the overall PV segment. Similarly, in case of two-wheeler, scooter is still a growing part of the two-wheeler segment, and within that, EVs are actually doing better. So that's how we're looking at. I mean, that's the way to look at it. At the same time, the export competitiveness is what we are also taking into account. I think our positioning on the OE side is on these lines. In terms of auto ancillaries, we're also looking at because auto ancillaries, the core competence is about manufacturing, and therefore, are they able to leverage that manufacturing competence to get into either consumer electronics or defense or aviation or those kind of things? Because I think that is one policy focus area from the government is also there, and if they can create such business opportunity, I think there is then the scope for the re-rating also comes in.
Mm. Okay. Sachin, give us a sense, therefore, that from an export standpoint, what's the best play at this point? How do you kind of play these specific segments like exports, which you seem to be bullish about?
Two-wheelers. I think two-wheelers, if
Okay.
you look at the percentage of revenue is growing, the margin is better because of the product profile which is there, plus the currency tailwinds are actually with them. So I think that is one clear focus area. And in terms of auto angs, obviously these manufacturing opportunities which just talked about, which are non-auto manufacturing opportunities, they're all export oriented. So they might, in certain cases, they are already meaningful, and in certain cases they are not meaningful, but they will become meaningful. So that entire focus is actually export. So that is actually the way to look at it.
Okay. What else are you liking in a market like this?
We are quite positive on this consumer discretionary trend,
Okay.
and so within that, actually, our tilt is equally balanced between passenger vehicles as well as two-wheelers. There's nothing like we are only on talking about two-wheelers, but we also have significant part of investment allocated towards auto accessories as well.
Hmm. Okay. And outside of the consumption space, what else are you liking?
Oh, yes. So, in terms of number of other trends which we are looking at, we think the energy intensity and energy transition is a very big theme. And I think this is also part of the AI build out. I think we will continue to see this cycle remaining strong for quite a visible period of time. And therefore, that is one important segment where we are positive on. And I think we are invested that through industrial and cap goods companies, which are actually play on the electrification as well as the energy transition. That is a quite a significant allocation for us. The other important area where we are invested is into these consumer internet thematics, and it is on the both sides. There are consumer internet thematic segments where the competition intensity is still very high, and therefore the profitability is suppressed. But I think the size of opportunity is quite strong. And the other end, there are companies which are very well established in terms of the niches, especially in BPC or certain other apparel kind of a thing, or personal care. There the profitability is established, and the growth rates are quite strong. Uh, Question is like valuations are demanding seemingly. That's where our allocation is there, but it is not as significantly large. So these are the two segment. Third important element is we believe the manufacturing focus from the government will continue to be very strong, both in terms of being part of the semiconductor value chain, as well as I think all the manufacturing or make in India focus which is there. These are some of the opportunities where our allocation with respect to the benchmark is quite high.
How do you look at some of the traditional spaces, IT, banks, and the like?
Oh, financial services were quite positive. I think now the macros are improving. Geopolitical conflict seems to be subsiding. So some of these headwinds from that side should subside, and that should aid the domestic recovery as well as the stabilization which is there. We are already seen in Q1, like where we started this discussion, saying that auto sales domestic as well as export have been strong despite the geopolitics conflict which was playing out there. I think without those headwinds, the consumer loans or retail loans should do even better. and even the commercial vehicle cycle should also hold very strong, which will actually reflect into the financials as well, the vehicle financials. So in terms of lenders, we are quite positive on the NBFC segment. We are quite positive on the vehicle financer as well. And large private sector bank is something our allocation is quite significant. In terms of another segment, which is IT, I think over there, the valuations have corrected a lot. And these companies are trading at a meaningfully lower valuation compared to their research fee also. So there is a clear valuation opportunity for sure, but I think there is still uncertainty as to how the AI impact will play out. Whether in the near term or in the medium term, the allocations towards the Indian IT services will remain under pressure, and also it will reflect into the margin pressures, etc. I think those things will be very closely watched out. We are a little cautious on that space. There, our allocation is meaningfully lower compared to the benchmark.
Okay, Sachin, areas of risk at this point of time, something that you'd be very cautious about, something that you already own, maybe you're not selling, or something that you're probably trimming in terms of your exposure to?
We are not trimming, but we are
Okay.
watchful about. We are watchful about. Yes, crude prices have declined quite sharply. However, we don't. I mean, there is no clarity. As in, if the conflict flares again, and those risks hardens again, that is something we should be watchful about. I also spoke about the AI build out per se. I think over there, these industrial names have done very well in last year and maybe in the recent past also. We have a strong conviction that this is a long way to go. However, looking at the prices, looking at the momentum which is there can be short-term bumps or blips into that. That is something we need to watch out. And I think these are the two areas where we are keenly watchful, because that's where our concentration is also very high.
All right. Okay, Sachin, great having you. We'll let you go.
Thank you.
Thank you for your views. Okay, we'll sit in a very short break, come back, talk a little bit more stock specific. Start getting a sense of what's playing out. Should you go out, buy IT? Should you wait and watch? We'll get a technical view first off, both on large cap as well as mid small, maybe ER&D as well. Give you the whole picture on the other side of this break and more, of course. Stay with us. Welcome back, and you're watching Closing Trades here on ET Now. Let me go across to Meryl. She's here with some of the other stocks that are buzzing in trade. Meryl, what's on your list this afternoon?
Yes, we've seen a few other stocks buzzing on the back of corporate developments. Starting first with MediAssist Healthcare in focus after it's increased its stake in UK-based Mayfair from earlier 60% to now up to 92%. The company's acquired an additional 31.75% stake for around 7.6 crores, taking greater control of its business. It has also appointed its Chief Business Officer, Nikhil Chopra, as the new CEO of Mayfair, signaling an even stronger integration strategy. Also in focus today is Sai Parenterals. Its subsidiary has signed an OTC medicine supply agreement with one of Australia's leading pharma networks in a contract valued at 202 Australian dollars, or roughly 1,300 crores. This is a significant order win for the company, and that is why this stock is also buzzing in today's trade. Another stock firmly in the spotlight today is DOMS Industries. It is in focus after completing the acquisition of Reynolds assets for a $3.7 million. This deal is strengthening DOMS' manufacturing capability as well as expanding its international footprint. Another stock in focus today is Tata Technology. It has announced a $100 million partnership with Tenneco over the next 5 years, and this collaboration will be focusing on mobility transformation as well as product development while leveraging India's engineering talent to drive innovation. And finally, Kernex Microsystems is in focus. It has commissioned Kavach 4.0 on a 207-kilometer stretch of North Central Railway, another milestone in the rollout of India's indigenous railway safety systems. So yes, these were a few stocks that we've seen buzzing in today's trade.
Okay, thank you so much for that, Meryl. Let's bring on our tech guests because it's a very decent day of trade. There's plenty of movers and buzzers. Second straight day where we're seeing some nice movement across counters. Kunal Bothra, of course, with us in the studio. We're also joined by Arpit Beriwal of Motilal Oswal Financial Services joining us. Good afternoon, both of you gentlemen. Let me start with you, Arpit. With regard to the index move, around 0.6% higher, 150 points higher. Does this change the kind of momentum that we've been in, that sluggish kind of momentum? And does this hint at a change?
Very good afternoon to all. So if we see overall Nifty, if I look at the technical setup on the weekly time frame, from last 3 weeks, it is trading in a range between 23,850 on the downside, whereas on the upside, 24,425, 24,440 levels. So looking at the setup wise, definitely buying is visible at the lower levels, but at the same time, index is unable to sustain above 24,300, 24,350 levels. So today we have seen good momentum. In fact, I'll say some bounce back move in IT index. Because of it, Nifty is relatively outperforming. But overall sense is that Nifty is likely to consolidate between this range of 23,850 to 24,250, 24,350, 300. Once it closes above 24,300 levels, we can see more momentum towards 24,600 levels. But till that time, overall our view would be range bound within this broader range, 23,850 to 24,300 levels.
What levels are you looking at, Kunal, if at all?
See, I think, just to give a very interesting comparison, look at the Nifty Next 50 index. This comprises of the Nifty stocks, which is beyond the Nifty 50 basket, and of course the other large cap set. Now that Nifty Next 50 index is actually at a 20% rally from 6,000 levels. We are almost at 7,200 plus on the 72,000 plus from 60,000 levels. So that tells you that there's been a 20% jump. The index is above the 200-day moving average by a margin of 10%. Now you come back to the Nifty 50 index, we are still trading at say 1,000 points or 1,000 points lower broadly for the benchmark index from its 200-day moving average. So that itself tells you that the major pressure points for the markets are the large cap names which are part of the benchmark indices. But other than that, even if you go to the Nifty Next 50, the mid cap, small cap indices, the market breadth has been fantastic. So that's why I would believe that only with few of those large cap names like HDFC Bank, Reliance, the IT names, the fact that these stocks are not participating is acting as a drag for the benchmark indices. And in that aspect, I would still look at 24,250 as a resistance for the Nifty over the near term and 23,850 as a support.
Okay. What's the take with regard to IT? I think Arpit indicated some bit of positive bias there. Kunal, your take on the Nifty IT in particular, and can this bounce really sustain, or will we see another dip? Because that's what we've seen. The trend has been, one step up, two steps down with regard to where IT is concerned.
Yeah, it's concerning for the IT stocks and the sector at large, where you've seen these stocks going into constant price correction. But, we've seen historically that many a times, when stock prices go into a very sharp corrective phase at the fag end of a correction, the opportunities of going contra emerges quite strongly. However, I would still believe that, these stocks have to confirm at least one level of a breakout of a swing pattern resistance. That level could be almost 4-5% higher for the IT stocks and the IT index at large from the current juncture. So it's more like a risk appetite trade for someone who's looking at this as a bounce back and want to play for the next 4-5%. I would believe that it could be a good opportunity to look at selective IT names in the likes of TCS, Infosys, for example, is doing very well for itself. Persistent, Tech Mahindra, etc. These are strong names which have been best performers in their respective legs of the IT stocks. But the bigger trend would emerge once we break past about the first level of swing resistances. So I would want to play a little bit more on the conservative side, would wait for that first swing resistance being taken out, then would initiate a buy on IT stocks.
Okay. Arpit, your top picks from within Nifty IT, if you were to play it, and what are the upsides that you're looking at from here, if at all?
So if we see overall the IT index on the monthly time frame, it is still the structure is lower as intact. And if I see as the onset of the new month, result season is ahead. So we are seeing some bounce back move from the lower levels. So overall, if we see the bigger trend is still negative. Having said that, if you want to play some bounce back move, so we have to better go with these selective large cap names. Looking at the overall setup wise, there are a couple of names that are there. just for a bounce back move. First would be TCS itself. Having said that, on the daily time frame, the structure is still lower, so we'll wait for confirmation. But if someone wants to be an aggressive, so one can go or contra buy over here with major support around 2000 for a bounce back towards 2150 levels. Important level is that weekly time frame it is still forming low rise structure. So the upside move also would be short lived. Along with the second would be from the mid cap space, that would be Coforge. Relatively, if we see Coforge was relatively outperforming comparatively within the IT packet. Last few days have been corrective phase, but today again some buying is visible. It is near its 50 dema. So I think from here on some bounce back move can be seen towards 1500, 1540 levels. This would be the two stock ideas. But overall, the bigger trend is still negative. So it's just a bounce back move to be played for next couple of sessions.
Okay. What we'll do is slip into a very short break. We've discussed a bit about IT, more to go. Something like a Tata Tech is perked up 6.5%. Curious to know as to whether there's a stock call out there with regard to some of the ER&D names. We'll talk a little bit about that on the other side. Stay with us.
Back at closing trades, and so much to watch out for in terms of the way the market is shaping up today. We're at 24,183, the day's highest point, and inching closer to the 24,200 mark after being in that range of 24,000 to 24,100 for the majority part of the trading day. You've got good moves coming in on the Sensex. The Nifty IT index, of course, we've been talking about it, is close to seeing 5% gains on an intraday basis. The broader end is also holding up wonderfully. It's the India VIX that's lower by 6%, so further cool off over there as well. But while all of that is on the equity front, let's take a quick look at the FNO 360, and Sajit is joining us with that on the show.
Thanks, Sneh, for that. If you look at what's happening in the market is currently, it's primarily a short covering rally, which we are seeing. The Nifty up nearly 0.76%, premium at 86, and the open interest unwind of nearly 1% in today's trade. So it's basically a lot of put writing is happening and unwinding of calls also in the option side. But in the future side, it's a shorts which are getting covered for the Nifty. The Nifty Bank almost flat at this point in time, and that's primarily because there's a there's a short covering also happening for some of the stocks, but at the same time a short build up happening for many of the private sector banks there. Look at what's happening in the Nifty Bank constituents. There's a long build up happening in HDFC Bank, ICICI Bank, but across the board others we are seeing a short build up happening, especially in the Axis, Kotak, Indus, BOB, PNB and Bandhan Bank there, and some of the public sector banks are seeing some long build up coming in there. Look at call and put writing. That gives you a clear indication. 24,000, there's an unwinding of call which is happening for the July 7 series. There's an aggressive put build up which is happening at 24,000, 24,100 and 24,200. But if you look at the distribution, it gives you an indication that, while there's a strong support coming at 24,000, 24,100, there is a resistance as 24,200, and that's where the market is at this point in time, hovering between 24,100 and 24,200 there. In the future gainers, you have some of the auto companies and ancillary companies which are active today, Exide, Sona, BLW and Force Motors all up between 6 and 7%. In the losers, you have stocks like BOB, Avenue and K Fintech, where we are seeing some short build-up happening. Among the open interest gainers, you have companies like Avenue. There's a short build-up happening. KPIT is seeing a 14% jump in short build-up, and Delivery is seeing a long build-up of 10%. Among the losers side, open interest losers include Persistent System, where there's a short covering happening. Alcom is seeing a long unwind, and Tata Elxsi is again seeing some shorts getting covered in today's trade there. But most active stock options today, Infosys 1000 July call. There's an unwind of 8.2 lakh contracts which is happening. A jump, Infosys was moved to the 4-digit figure, 4,043. Good support coming in for Infosys. The premium up nearly 28 rupees to 64, and that's one of the most active counters in today's trade. In the put side, you have TCS 2000 July put, where The open interest is up nearly 1.76 lakh contracts. The premium has fallen by 46 to 39.40, but the stock hovering just above the 2000 mark at 2070 odd levels. So it's a short covering rally which is happening in the market at this point in time. The Nifty hovering around 24,181 at this point.
Okay, thank you so much for that, Sajid. Let me bring in Mitali. Bank of Baroda has agreed to pay about 5,700 crore rupees to settle the long-running NMC health litigation through an out-of-court settlement agreement. Mitali here with all of the details on that one. Stock down.
Right, so Bank of Baroda, that stock seems to be under pressure and is down nearly 5% as we speak after the PSU lender announced a massive 5,700 odd crore rupees of settlement in the long-running NMC case. Now, the bank will be paying around $600 million or roughly 5,700 crore rupees to settle the litigation linked to the collapse of UAE-based healthcare giant NMC Health. Now, importantly, Bank of Baroda also says that this settlement is without any admission of liability or wrongdoing, and it brings all the claims against the bank to an end. Now, what is the background of this NMC case? If we talk about that, so back in 2020, NMC Health, founded by B.R. Shetty, collapsed after the investigators, they uncovered around $6.6 billion of hidden debt. Following the collapse, NMC's administrators, they sued B.R. Shetty as well as the former CEO Prasant Manghat and Bank of Baroda, alleging that the bank facilitated certain banking transactions linked to the fraud. Bank of Baroda has consistently denied these allegations post the investigation, but now, instead of waiting for the court's verdict, the bank has now chosen to settle the case. While the move remains a major legal overhang and ends years of uncertainty, that amount, particularly 5,700 odd crores, is actually roughly equivalent to 1 quarter's profit if you see for Bank of Baroda, and it's one of the reasons why you can see that stock has been declined after this announcement has come out.
Okay, Mitali, thanks for taking us through that. So that, in a nutshell, is the chain of events that have transpired at Bank of Baroda, and this out-of-court settlement being the final one, the latest one rather, and we're seeing a cut of about 5% on the charts for Bank of Baroda. Kunal, keeping the fundamentals aside, this 5% dip on Bank of Baroda looking good to buy on the technical basis?
See, I think PSU stocks, overall PSU banking names are the ones where I have been little shying away in terms of initiating a trade, because most of the PSU banking sector and the stocks within the sector are still looking, I would say, relatively weak on the charts. So even though I think Bank of Baroda has come back to that multi-week low around 255 to 58 mark where it's trading right now, I would still be a little skeptical of going for a buy on the stock.
Okay, skeptical still on Bank of Baroda, and that is the sentiment for the PSU banking basket as well. Arpit, hi, I was just looking at some of the auto anch stocks that are abuzz in trade today. The case being something like Sona BLW, you've got CE Infosystems, Exide is doing well. Some tire stocks like Seat are doing well. Anything looking good from the broader auto pack? Anything from auto anchs looking attractive?
So absolutely, if we see the auto index, if we see the peripheral industry within the auto index, they're looking quite strong, especially the auto ancillary sector as a whole, apart from the auto key stocks. If I look at the chart structure such as of Sona, BLW, along with the Bharat Forge or Force Motors. So this couple of ideas are looking good. So first pick would be from this place would be Bharat Forge. So looking at the chart setup of Bharat Forge, quite strong on the monthly setup. A range breaker on the monthly setup, consolidating on the daily and weekly time frame. The stock looks good, overall holding well above to its crucial support zone around 2050. The stock look ahead towards 2250, 2300 levels positionally. Along with that, today, after a long time, Sona BLW has given a classical range breaker on the weekly time frame after almost 7 to 8 weeks. And if we see the setup wise, the momentum is still continue and the stock can head towards 700, 720 levels. So within this fit, Sona BLW and Bharat Forge looks quite strong for next couple of days, 2 weeks time.
Okay, Sona BLW and Bharat Forge looking strong. We've lost that feed with Arpit, but on that note, Arpit, thank you so much for your time today and for sharing your views and your stock recommendations with our viewers. With that, time to slip into a very short break. We'll keep the discussion going on the other side. Stay tuned.
Welcome back. And, markets looking decent this afternoon, frankly, and it's an IT-driven rally. But outside of IT, you also have some decent moves in the Nifty Mid-Cap Index, which is up around 0.5% thereabouts. So even broader markets doing fairly okay for themselves. The Small Cap Index doing very well for itself, nearly 1% in terms of the gain there. Within the Nifty 500 basket, you're again seeing some good moves. We did see some good moves yesterday, equally good moves today. Zensar is up 10%, MapMy India is up 8%. There's Exide, which has been gaining from strength to strength. That one is up 7%. Sona BLW, Tata Tech, Coforge, Force Motors. The tilt is auto and IT. Really, that's the tilt. And why not? Because some of those numbers were quite good with regard to especially auto. Let me, in fact, take it across to Nitin Raheja. He's joining us. He's from Julius Baer, India. Nitin, hi. Give us your take with regard to what you made of the auto sector numbers and anything that really stood out for you in terms of the numbers versus what you were expecting.
No, I think the auto sector numbers have been pretty strong. And in a sense, for all the weakness that the sector has shown in the last quarter or so, in fact, if you look at a lot of auto companies on a YTD basis, they are actually trading in the negative in terms of the return. But for all the weakness, the numbers have been quite resilient. I think the fears with regard to high oil prices and inflation impact have so far not been visible. And I think valuations of the sector are yet pretty well priced, pretty attractive from a longer term investment perspective. So we do like the auto sector. We like companies who are playing the premiumization theme. So by that logic, companies who are in the EV segment of the market. We like companies who have an EV play out there and are strong in that part of the business. I think, right now, the commercial vehicle sector seems to be doing quite well. So I think these are the 3 or 4 broad areas that we like.
Those are some of the names within the auto pack that are looking good. Just want to address a news and the development on ITC. We've seen a new launch coming in from ITC. They've launched the coconut cola under their Be Natural brand. Remember, their Be Natural brand, it caters to packaged coconut water. And now they've launched a coconut flavor cola over there. The new coconut cola contains no added sugar, no caffeine, provides only 9 kilocalories per serving. And coconut cola is available in a 250 ml can, priced at 60 rupees, more or less in line with where the other cola variants are priced. Coconut cola is part of ITC's broader innovation in their beverages portfolio, and the beverages portfolio includes their Sunfeast breakfast smoothie and milkshakes. So new foray by ITC into the cola segment, and lots of new forays have been happening by consumption companies, because you've seen some developments coming in for Varun Beverages also, wherein, at least not in India so far, but in their African business, they have forayed into the Alcobev segment. So that's a big foray for them. They had announced this roughly 6 months ago. And now you've got this foray coming in from ITC. Kunal, on the charts, these consumer staples names, the bigger ones, especially the ones that have beverages exposure, like you have your Dabur for their real juices, now ITC and Varun Beverages. Amid the beverages space, what's looking better on the charts?
So I think Varun Beverages, out of the 3 names, is the one which is looking better. ITC and Dabur, I think both of these stocks are still trying to, I would say, struggle in terms of trying to find its momentum back again. These stocks are still below their long-term averages. It's just that I think the last 1 or 2 days, you've seen the FMCG stocks overall rallying up, and that's why you saw names like Dabur trying to just about perk up a little higher from their previous swing lows. But on the medium to long-term charts, ITC, Dabur, both of these stocks are still showing signs of struggle or in terms of downtrend. But Varun Beverages, on the other hand, this recent move from 400 levels to 500 plus mark where the stock is trading right now, I think is very, very strong. It's been led by stronger set of volumes. The momentum has come back again into Varun Beverages. So this is one stock which I'll be particularly bullish on.
Okay, Varun Beverages, what's your take on this one, Nitin?
We don't really comment on single stocks.
Okay, so on the entire, maybe the consumption theme, and within that consumption theme, maybe in the drink segment, beverages segment.
Well, we are positive on the consumption segment, but what has happened is there has been a commoditization as far as the whole segment has been concerned, and that has impacted the intensity of competition had gone up, and that was impacting companies in the segment. The other element was that we had had a recovery where the bottom K was yet struggling post-COVID. So again, there, what we had seen was that premiumization of consumption of people who are coming up with products which are so either you have a play which is you play it seasonally, and you would find a lot of these summer plays. So beverages would play that out, and I think this is going to be a good year, considering the kind of summer that we had for the beverage pack, and so on and so forth. Or you sort of play it through someone who has a differentiated offering or a premium offering. I think those are the two key areas which are doing well as far as this is concerned, and that's pretty much been the theme across when we've seen some of the companies who have announced the results.
Right, so that's on staples and particularly beverages. But Nitin, what is your take when it comes to consumer durables? Now, this year, after two very muted summers, has been good for some of the AC makers, AC component makers. So consumer durables, so far at least, from what the understanding on ground is that Q1 might be pretty decent for them. But what about the rest of the quarters? What about FY27 overall? How do you think the consumer durables will be? And do you believe that the sluggishness that has been seen in the recent past can be made up, if at all?
We are positive on that whole pack. We think that post the GST cut, the sentiment had gone up and things were looking good. And then you had this whole inflation and supply chain related issues, especially with regard to China coming into play, with a lot of companies in the air conditioning segment, and so on and so forth. But I think the summer being what it has, I think they will have a very, very strong quarter. Especially the air conditioning companies and the whole peripheral ecosystem within it, the suppliers within that ecosystem, and so on and so forth. And, as we go 3 months down the road, we will again be entering festival season. So I would think that this year as a whole should be better for the consumer durable manufacturers.
Okay, sounding optimistic on that note. Let's refocus, and it's time now for an 80 Now exclusive. The government holds meetings to review the Ratna status of Cochin Shipyard, and it's likely to be upgraded to Navratna in the PSU category. My colleague Prakash is joining us with more details on that. Prakash, what are you picking up?
Well, it's a positive development for Cochin Shipyard Limited, as the government has held a meeting to review the Ratna status of the company, which is likely to be upgraded from Mini Ratna to Navratna. A very significant development coming in. In fact, the Department of Public Enterprises has held a meeting to review the company's eligibility based on the prescribed financial parameters. A very crucial development. Following DP's review, the proposal will be evaluated by an interministerial committee, and then the final announcement will be made. The Ministry of Port, Shipping and Waterways has already submitted the proposal for a status upgrade, which is under DP's review. You are aware of the fact that the status upgrade will provide the company's board with greater financial and operational freedom, as a Navratna PSU is allowed to make investments up to rupees 1,000 crore without prior government approval. Therefore, a status upgrade will be crucial for the company's financial freedom. ET Now had already reported the government's proposal to upgrade Cochin Shipyard Limited and GRSE to Navratna status, where GRSE was upgraded from Mini Ratna to Navratna last month. Now, sources suggest that Cochin Shipyard Limited will be upgraded as a Navratna PSU very soon.
Okay, thank you so much for that, Prakash. Nitin, let me come to you on the IT sector. I mean, 5%. We've gotten used to the volatility in IT, but 5% is a bit much, even given the fact that we've gotten used to this. But where do you sit in terms of the argument?
Look, I think there is too much of confusion in terms of the path ahead for the IT companies. We are not clear in terms of the impact of AI. AI will have an impact, right? But what's the extent of the impact that AI will have is something which is yet not very, very clear. Okay, so we are yet in very early days. In fact, if you really look at the currently the whole AI trade globally, it's based on a capex-oriented trade. The whole application of AI across industries and their what would be the impact across, we don't know. Now, we know for sure that AI will have a revenue deflation impact. But what is the revenue deflation impact? Difficult to say. Now, in such a scenario where there is uncertainty as far as future is concerned, what is the P multiple that you're ready to pay? Honestly, I don't have an answer to that. But if I go back and look up in history, and in the past, for example, when we entered into this period, IT was trading somewhere around 20, 21 times earnings, the top IT companies. As we talk today, they're trading around 15 times and 16 times earnings, with earnings having growth having contracted to in the low single digits. But if I go back and look in history, in times such as when the technology bubble sort of burst in 2001, or in 2008-9 when you had the Lehman crisis, when there was uncertainty because a large component of IT spending was from financial services in the US. IT had even traded at multiples closer to 11 and 12. So if one were to sort of extrapolate from there, could they further derate? Answer is possible. Surely, looking at it currently at a 15 multiple with the kind of businesses, the kind of cash flows, the dividends that they are putting out, makes them very attractive from a pure valuation perspective. But the question is on growth, and what will be the extent of the deflation in revenues. So I would probably be underweight on the sector, because right now I don't have a crystal ball answer to seeing what could be the growth prospects for the sector.
Enough, in fact, and that's a fair assessment of the sector as well. And in fact, the recent reports that we've been reading about the impact of AI, they seem to suggest that AI is actually doing more good than harm in terms of employment numbers. Very recently in the US, it's an interesting news that has come up that Ford has rehired the 350 engineers it laid off because they realized that AI could not do what their human engineers were doing. So, I mean, it's really interesting the way that we've been seeing this kind of news develop all over the world. But Kunal, that makes me think a sector that is more or less safe, if we could call it that, from AI is real estate. There is not much AI can do in terms of human labor. How are you looking at this sector on the charts? Any names that look good?
Yeah, there are so many stocks which are now looking attractive for the real estate names. It started off initially with Godrej Properties and Oberoi Realty being the best names for the performing stocks from the pack. But now you have so many options. Prestige, for example, is looking attractive. Macrotech Developers or Lodha is the one which is looking attractive. DLF, a stock which has been one of the stronger stocks from the other heavy-weighted stocks in the real estate pack, but apparently an underperformer in this last 3 months of rally for the real estate stocks comparatively. That stock is now started to look attractive above 640, 650 mark where it's trading right now. So options have started to open up quite strongly. You're looking at the Nifty Realty Index also. I think it's gained almost 250 odd points, 200 points plus from its previous major lows in the month of March. 660, 650 was the Realty Index, and now we are almost at 870, 875 on the Nifty Realty. So price-wise, trend-wise, I think it's been an exceptional sector and still continues to look strong. From the current levels, if you ask me specifically names, I would look at Oberoi Realty, Godrej Properties and DLF at the current juncture. These are 3 good names which I would believe could continue to move up higher from the current levels.
You like realty too? Nitin, how do you look at the real estate pack?
I think the real estate pack, when you look at it, one of the things clearly going for it is the fact that the sector has had a correction in terms of valuations over the last 1 year. Also, I think the other element in real estate that one has to, when you anecdotally talk to people on ground, is this, that you are seeing fresh developments slowing down. Clearly, a lot of what you're seeing today is the older projects that were announced in the pipeline, which have come in, and so on and so forth. Also, the fresh supply that is expected to come. We are in the 3rd or 4th year of the real estate cycle post-COVID. So you're going to see an incremental amount of fresh supply. So price increases are not going to happen. And I would play this selectively based on individual developers and projects, for the simple reason this is going to be more of a bottom-up play rather than the whole macro play that happened 3 or 4 years ago is behind us. Now it's really going to be individual companies depending on what their product basket is, and you need to play it through that.
That's your view on real estate. Nitin, how are you looking at defense? Because, we've been talking about sectors where we've seen swings and we've seen cycles, and defense has also been one of them. Especially on the shipbuilding front, like my colleague Prakash was just highlighting, we've got positive news flow on Cochin Shipyard. Of course, that's source-based, so we're waiting for a confirmation on that. But other than that, how are you looking at the entire shipbuilding segment? And within defense, would that be your preferred segment, or are there other themes that you're exploring at the moment?
So, there is clearly a tailwind as far as defense as a sector is concerned, from the whole, government spending on defense, plus the whole incentive to make in India and also possibly export from India certain systems and subsystems and so on and so forth. So clearly that is there. However, one needs to bear in mind the kind of valuations that these companies are today trading on are actually discounting a healthy growth prospect for a couple of years, because they're all trading at, most of them are trading at say 40 times multiple and so on and so forth. Now, these are typically businesses, if you look at just from a pure business perspective, they don't have the return on capital to justify these kind of multiples. They're very working capital intensive, depending on government payouts for their working capital cycles. So again, out here, the way I look at it is, if I were to play defense, I would play it through a couple of the larger players out there who are actually developing a whole ecosystem under them, because the ecosystem players are trading at substantial valuations. While the larger players are not cheap, but they're relatively cheaper. So I would play it through some of the larger players, the government, 3 or 4 large government companies. As far as the shipbuilding sector is concerned, I think it's in for a multiple year cycle, and one could surely have an exposure there.
Okay. Nitin, just take a bit of a pause on this conversation. Let me go across onto an ET exclusive. We've learned from our sources that the first GST Council meeting after the massive GST rate cuts is likely to take place this month to discuss a host of issues. Kuldeep Singh joins in with more details on that one.
The GST Council is likely to hold its meeting this month. So this is what we have been hearing from our sources. And remember, this will be the first meeting after the September 2025 rate rationalization. Now, what we have been hearing from sources is that the Council may review the outcome of decisions taken in last year's meeting. And we must tell viewers here that the GST Council had simplified the GST regime during the last meeting. Apart from this, the Council may also discuss the issues related to inverted duty structure. Now, we must tell the viewers here that the idea occurs when the GST rate on inward supplies is higher than outward supplies. This actually results in accumulation of unutilized input tax credit, which ultimately blocks the flow of working capital to businesses. Now, the key sectors that have been affected because of this are manufacturing, pharmaceuticals, and FMCG. And the businesses have been raising this issue earlier also. Apart from this, the GST Council may also discuss and recommend the operationalization of Section 11A of the CGST Act. So remember, this act, this section was inserted in CGST Act in 2024, and it gives power to the centre to waive past GST liabilities. Now, important to note here is that the Supreme Court recently had upheld the retrospective operational imposing of GST at 28% on the gaming companies. Post that, what we have learned from sources is that some of the gaming companies had approached the government seeking waiver of the arrears. Now, the arrear here is somewhere over 1 lakh crore, and it will be difficult for the government to recover this arrear because a lot of these gaming companies have shut down their operations. Apart from this, what we have also been hearing is that the opposition ruled states may again raise the demand for compensation. Remember, in the last meeting also, the opposition ruled states had demanded that they should be compensated for their losses. Now, what we have been hearing from the sources from opposition ruled states like Punjab, Himachal, Karnataka, that these states, the finance ministers of these states are going to take up this issue again when the council meets. Recently, the Fitment Committee of the GST Council had met in New Delhi, and we must tell the viewers here that the agenda that has been approved by the Fitment Committee is being recommended to GST Council for discussion.
Okay, Kuldeep, thank you so much for all of those details. We're going to be watching out for the developments on this GST meeting front. It's going to be a crucial one to track, and of course, we'll be bringing you all of those updates as well. But Nitin, I want to come to you and speak to you about the development that we're seeing on the crude front. For a couple of days now, crude has positively stayed below $75 a barrel, and it's not moving too much. And in fact, all the cues that we're getting globally as well are all indicating that talks have been positive between the related parties. And so far, there is no spike up or pressure on crude. If you were to play this entire fall in crude theme, would you be doing that via OMCs? Would you be looking at aviation? Would it be tire, rubber stocks? How would you think? How do you think would be the best way to play this theme?
My preference would be for structural long-term stories who could benefit. So aviation is one, rubber is the other, as such. As far as OMC is concerned, it's a very short tactical trade and normally gets discounted. By the time you see crude prices coming off, the stock prices of those would have already rallied, and so on and so forth. So I would rather place companies such as these, aviation and rubber and so on and so forth, or even chemicals, certain in some of cases, who will really have a long-term benefit going there.
Mitali joining us here. Some of the banking numbers which have trickled through. Some of them trickled overnight. Some of them have come out today. Mitali, what's on your list?
Right, we're talking about the Q1 business updates coming from the bank, and they seem quite encouraging for the Q1 FY27. If you see the loan growth, it has remained healthy despite Q1 being seasonally weak quarter. Deposit growth, they continue to lag the advances, although the loan to deposit ratio, they have started to moderate a bit. Among the individual lenders, if you see, so Jammu and Kashmir Bank is leading the pack with the strongest loan and deposit growth. Dhanlaxmi Bank has reported healthy growth numbers across both metrics, while Tamil Nadu Mercantile Bank, that particular stock, it remains in focus after reporting the highest sequential growth in this quarter. Canara Bank, it continues to see a strong momentum led by its RAM portfolio. On the other hand, Indian Bank has actually posted a weaker set of numbers, slightly softer side, while Punjab and Sindh Bank, it continues to trail the industry. Now, starting with Bank of India, the gross advances there grew nearly 19%, while domestic deposits, they rose above 16%. ESAF Small Finance Bank also came up with their business update, and it reported a solid quarter with robust growth seen across advances as well as deposits. The retail lending remained the key growth driver in this quarter. Secured loans now account for nearly 62% of their overall portfolio. Dhanlaxmi Bank, it delivered another strong quarter with total business growing nearly 21%, driven by a 26% rise in its advances and 17% surge in its deposits. It was led by the gold loans, which stood out for this quarter, surging nearly 76%, and MSME advances rising 29%. Also, JNK and Tamil Nadu Mercantile Bank were among the standout performers for this quarter. JNK Bank, it reported 26% loan growth and nearly 17% deposit growth. While if you see TMB, it recorded 27% of loan growth, among the strongest sequential advance growth, and also 20% growth in its deposits. Also, Bank of Baroda numbers came in just a few minutes ago, and if you see, the global deposits there have risen nearly 14% on a yearly basis, while the global advances are up 17.5%. So based on the early numbers, we see that it seems to be quite encouraging Q1 update for the banks.
Okay, Mitali, thanks for taking us through that. So that's a quick roundup of all the private as well as public banking Q1 updates that we've seen. We've spoken about banks, so let's shift focus and speak about some other sectors that have been doing well. Nitin, talk to us about what else is looking good in the market right now. We've seen some good moves coming in metal. In fact, on the days where we've seen some weakness in the market and some expiry pressure play out, metals have been holding on well. Are you positive on this space?
Yes, we are, although we do believe that one leg the rally has happened, and we've seen some consolidation in the last few months. But longer term, we do believe that this is a space that will continue to do well in India.
You're looking at banks, Kunal, especially some of the ones which have come out with numbers, the PSU pack, some of them, Can Bank, Bob. Bob, I know you're negative. What about Canara Bank?
Yeah, I think for most of the PSU banking names, I would not be very bullish on. It's not that I'm very bearish on these, stocks. It's the construct of the entire bank Nifty, where we were in the last 1 year, vis-a-vis, I think, start of this calendar year. So I think in that comparison, the private sector banking stocks stand out quite strongly and starkly, I think, with respect to comparison between the PSU banking names. And remember, I think PSU banking stocks had a fantastic uptrend post, I think, July, August 2025, where at one point of time, many of the PSU banking names were up 20-25% in a very short span of time. So I think now it's more like a time-wise consolidation for many of these PSU banking names. And that's why you see many of the stocks, the likes of Canara Bank, PNB, Bank of India, Baroda, etc. These stocks are just about trying to trade into a broader range for themselves over the last 3-4 months. And this, in comparison with the private sector banking stocks, makes the trade a little bit more attractive for the private sector banking names to continue to move up higher till the time these PSU banking stocks consolidate. And one more point, historically we've seen that whenever the consolidation happens for PSU banking sector, there have been at least 2 or 3 consecutive months where the PSU banking index remains to be an underperforming index. Only post that is where we expect revival to happen. So even if you try and compare with that, I would expect that maybe this part of this entire month, you might probably expect PSU banking stocks and the index at large to be more of a consolidative trend.
Okay, that's on the PSU banking space. Shifting focus, we've been speaking about real estate, and India's residential real estate market is expected to report yet another healthy quarter driven by strong demand in the luxury and mid-premium segments. While launch delays may weigh on Q1 pre-sales for some developers, the underlying demand itself remains resilient, and Rabinder is joining us to tell us what to watch out for when it comes to some of the real estate names in their Q1 earnings. Rabinder.
Well, as in Q1 FY27, demand across the luxury and mid-premium housing segment remains strong, with healthy sales in key markets such as NCR, Bangalore and Hyderabad. And as per Nomura, despite healthy demand, Q1 FY27 pre-sales are likely to be impacted by the delayed project launches as developer postponed to launch key launches to Q2 of FY27 while awaiting better market sentiment. And underlying demand remains resilient with sustained sales, customer footfalls and conversion rates staying healthy, while the Middle East conflict has no meaningful impact on the existing inventory sales of the real estate sector. And as a result, Godrej Properties is expected to post the strongest pre-sales growth, while Prestige Estate, DLF and Oberoi Realty may report year-on-year decline due to the high base, and Lodha Developers and Aditya Birla Real Estate are likely to remain broadly to remain flat in Q1 of FY27. And although near-term report number may appear weak, but if we look at the pre-sales of some of the real estate companies like Lodha Developers and Godrej Properties, as this number are as per Nomura estimate, and Lodha Developer is expected to register pre-sales of rupees 4,600 crore, while Godrej Property is expected to register pre-sales of rupees 8,000 crore in Q1 of FY27, which is followed by DLF, Oberoi Realty, Aditya Birla Real Estate and Prestige Estate. And if we talk about the valuations of the real estate companies, at the same time, real estate valuation has corrected sharply from the peaks in the recent years, and even as the demand remained healthy, creating a more reasonable valuation backdrop for the investor. And if we look at the valuation, then Prestige Estate valuation, peak valuation was 70 times P. Now it has corrected to 32 times. And lastly, in the recent month, the stock performance has also corrected sharply, indicates improving investor sentiments. Despite a weak one-year return, suggesting the market is beginning to anticipate recoveries, which is supported by strong demand and improving launch pipeline.
Thank you so much for that, Rabinder. Real estate clearly looking attractive from valuation or versus a historic valuation perspective, so something to keep on your radar. Nitin, what's the one sector segment pocket? Earning season is upon us. What is it that you believe will stand out, which the market isn't fully pricing in yet?
I think the big one is something that we just discussed earlier. We've seen some very strong credit growth numbers on the banking side. So I do think that that's a segment that would actually show up with very, very strong numbers. The interest rate cycle has bottomed out, so the compression of NIMs is also close to bottoming out, and valuations are yet very attractive, especially on the private banking side.
Okay, so that's the take when it comes to the fundamentals of that. But Kunal, to set us up for the trading day tomorrow, talk to us about what kind of levels are we expecting at open. It's been a good day for us. Can we expect a repeat tomorrow?
So it depends on the performance, sector performance. So what's happened is over the last 2 days, we've seen the markets showing some signs of positivity on the back of some strong sector trends. Yesterday, for example, it was banking, financial services, which did very well. Today, it's the IT stocks which have actually outshined most of the other sectors. So it's more of a sector rotation, kind of a play. But yeah, I think for tomorrow, in terms of levels, I would look at 24,250 being at least challenged, if not being taken out, in terms of the Nifty trends. And the new support for the index could now, once we scale past about 24,250 mark, the new support which we could be looking at would be at 24,000, 24,050.
And Kunal, difficult to ask you, and I'm trying to get an understanding on this. The kind of move that we've seen on IT, a lot of news that, the kind of valuation cut that they had seen, it's just been bought into. Do you believe this strength can sustain at least till tomorrow, or can we look at a reversal tomorrow itself?
I think for the first time in the last many, many weeks, and I'm talking of it from at least the last 15 to 20 weeks for these IT stocks, so far, when we look at this on the weekly charts, it's a bullish hammer pattern for the IT stocks. That's a very good positive, but we need confirmation, because tomorrow we'll see the confirmation of weekly closing. So even if they stay at current levels, say by tomorrow, for most of these IT stocks, we would get a very strong confirmation that on the weekly charts we could be at least at a point where for the next 3 to 4 weeks we may see a very good short covering as well as a revival for these IT names.
Right, Kunal, quickly, what could the sector leadership tomorrow look like?
Looks like that I think IT, banking, financials, and real estate, I think these could be the 3-4 sectors which can continue to outperform.
Wonderful. With that, Kunal and Nitin, thank you so much for your time. About a minute and a half left for us to wind down the day of trade for Thursday. Let's start taking a look